Yeah, good morning, everyone. So we continue to saw market showing positive signs in the US, mainly driven by the strong results. Yesterday, General Electric and General Motor both have reported above expectation number, and both the shares moved up. If we talk about the overall aggregate US results of S&P 500, around 79% of the company have reported a result above expectation out of the company which have reported up till now. So that is giving positive indications on the strong performance of the corporate results in the US. And similar is the case in India also. The Indian corporate are also showing stronger performance, and that is supporting the overall equity market. So today there is a Fed meeting, but there is a conflict between Fed outcome, which may be increase of 0.25 and further direction what the Fed is likely to give. And against that, there is a strong corporate results which are coming. Even if you see the Asian markets are mostly trading some are showing some negative signs and some are positive. So mixed reaction from these, but commodities are showing positive sign, wherein oil is further up by around $0.5 as compared to yesterday's same time. And also iron ore and steel both are up. Iron ore is up by almost around 2% and steel is up by around 1.5%. So yesterday there was a news that China may be considering stimulus for the economy, and post that most of the commodities are showing further sign of upward movement. So overall seems positive. We had seen some profit booking in some stocks in India based on the result as well. But uh, the in aggregate results are good, so quite possible we may see positive trend in today's trade. Now I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. This is Ayush. So, what we have seen in Indian market from last 2 to 3 trading sessions, we are seeing a slight profit booking. Uh, Even in the last few trading sessions, we have seen lower top, lower bottoms in Nifty, but it has given a flattish closing in yesterday's trading session above 19,650 levels. So again, today we are expecting a flattish move and we are expecting a sideways momentum in Nifty. The immediate resistance for Nifty is placed at 19,740. Once 19,740 is broken, then we can see a rally to a 19,820, 19,900 level. Whereas if we continue to witness the profit booking, then 19,600 will act as a very important support zone, followed by 19,500 to 470. Moving on to Bank Nifty, similar movement has been seen in Bank Nifty from last 2 to 3 trading sessions. It has become a little sideways, and again forming a like lower top lower bottom formation in Bank Nifty. The immediate resistance from where the Bank Nifty will start moving upward is at plays at 46,150. Once that is broken, then 46,370 to 46,600 levels will be seen. And the immediate support for Bank Nifty is currently placed at 45,700, followed by 45,500. Moving on to Nifty Financial Services, it has given a good closing about 20,500 levels. The immediate resistance for this index is placed at 2640, followed by 20,750. And the support is 20,450 and 20,380. Nifty and Bank Nifty are moving more like in a similar pattern. We have a conditional buy call here. It is going to be Deepak Nitrite. It has given a consolidation breakout on its intraday chart above 2000 levels. It can go up to 2100 levels in the coming session by keeping a strict stop loss of 1958. Again, it's going to be a very stock specific market. We request everyone to trade with strict stop losses. That's all from my side. I request Nirav to take the call forward.
Yeah, thank you, Ayush. On the derivative front, now we are entering the rollover zone. The expiry is tomorrow, and we are seeing the data still being positive. There was a drastic decline in VIX yesterday, 12% decrease. It came down from 11.5 levels to about 10.2, which is a huge decrease. So, VIX wise, it doesn't seem like the market is going to give up so soon. Also, PCR around 0.8 levels is at good, comfortable levels. Looking at the overall data, it seems like we are going to be range bound for a couple of days in between 19,500 to about 19,750 odd levels. Once the range is broken and we see some liquidation at 19,800, 900 and 20,000 strikes of calls, then we'll see some buying coming in again, and Nifty then will look to cross above the 20,000 levels. But at this point, next couple of days is going to be range bound action. um, Good support placed around 19,500 level, which has the highest put built up at this point. uh, from the stock specific front, we saw some good buying action yesterday in the cement pack, but major action continues to remain in the oil and gas pack, where we are seeing good buying action in ONGC, HPCL, BPCL. I see. So these stocks will continue to witness some buying. Motherson Sumi, after good short covering rally, is starting to see long creation, which is a very strong pattern. So it is likely to witness good buying going forward. Yeah. So that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Piramal Enterprises will consider buyback of shares on 28 July. This is positive. At Canfin Homes, the internal team of the company has found that employees of one of its branch, Ambala, have committed fraud of 38 crores. So this is negative. L&T result is above expectation. Company saw strong pickup in execution and order inflows led by the core infra segment. Infra segment revenue grew by 56% and other segments combined grew by 27%. Company has revised the current year revenue growth estimate from earlier guidance of 12 to 15% to 18% now. Although margins were under pressure, but due to strong execution on revenue front, absolute EBITDA figure is still around 8% above estimates. Order inflows increased by 57% year on year to 65,000 crores, and order book increased to 4,12,000 crores, which is up 14% year on year. Also, L&T has approved a buyback of 3.3 crore shares, which is 2.4% of total outstanding shares at a price of 3,000 rupees through tender offer, aggregating to 10,000 crores. So this development is also positive and followed by strong results. So expect L&T to do well. Bajaj Auto posted result which was in line. Revenue grew 29% year on year on a low base, and margin was stable at 19%. Margins are expected to remain stable as raw material prices are under control. Domestic volumes have recovered strongly for the company, and company sees sustainable volume growth of mid-single digits for the domestic industry in coming months. Export situation remains weak, although it is improving on sequential basis. Company will be investing 400 to 500 crores on the EV side in both two-wheelers and three-wheelers in the current year. We are positive on Bajaj Auto. Prudent Corporate Advisory Services, which is into distribution of mutual funds, result has declined. Quarterly average AUM grew 4.7% sequentially, whereas in case of IIFL Wealth, this growth was 9.3% and Anand Rathi Wealth 11.3%. So company has underperformed its peers. Further, revenue declined 6% sequentially, which means that yields have come off, and also negative operating leverage resulted in EBITDA declining by 33% sequentially. Because of these results, we are neutral on the stock. UTI Asset Management Company result is okay. AUM grew by 4% sequentially, lower than industry growth, and thus company continues to lose market share. Since last 4 odd quarters, we have seen that company is losing market share. So although revenue grew 5% and EBITDA 26%, we think market will ignore these numbers and focus more on market share. We are neutral on UTI Asset Management. SBI Life Insurance result is below expectation. APE grew by 4% year on year versus 22% growth witnessed by HDFC Life. Also, VNB figure was flat year-on-year and was 9% below estimates. So we are neutral on SBI Life Insurance. Thank you.
Good morning. KPIT Technologies has posted marginally above expectation numbers for the quarter, with dollar revenue coming in at 133.9 million. EBITDA margin came at 19.5% and PAT came at 134 crores. For FY24 guidance, the company has guided CC revenue growth to be in the range of 27 to 30% and EBITDA margin to be in the range of 19 to 20%. Outlook is long-term positive. Stock is trading at a PE of 56.3 times FY24 EPS. Cient has posted in line with expectation set of numbers for the quarter on a group level. Dollar revenue came at 205 million. EBITDA margin came in at 18.7%. Cient DET revenue, digital engineering and technology revenue came at 1455 crores, which is up 0.4% QOQ. And had an EBIT margin of 16.1%. In FY24, the management expects DET revenue to be in the range of 15 to 20% year-on-year in CC terms, and normalized EBIT to be in the range to improve by 150 to 250 bps year-on-year. Stock is trading at 21.8 times FY24 EPS. Thank you.
Yeah, good morning. So today a new IPO is opening named Yatharth Hospitals and Trauma Care Services. The company is a multi-care hospital chain offering healthcare services in cardiology, neuroscience, orthopedics, oncology, urology, etc. The company has its hospitals in Noida, Greater Noida, and Noida Extension. Further, the company acquired a 305-bedded multi-speciality hospital in Orcha near Jhansi, which commenced operations in April last year, taking company's total bed capacity to 1,405. The proceeds from the issue will be utilized to repay its debt, post which the company will be debt-free. So Yatharth is one of the largest hospitals in Noida region, and its number of occupied beds and ARPOB, that is average revenue per operating bed, grew by 13% and 12% CAGR respectively over FY21 to 23, which led to a 51% CAGR growth in company's revenue to rupees 520 crores in FY23. EBITDA also grew at a CAGR of 41% over the same period. India's current healthcare expenditure is largely dominated by private expenditure, and North India regions, including Haryana and Uttar Pradesh, have lower than average doctor and nurse density per 10,000 population. This is expected to improve going forward, favoring companies' expansion plans. Company's acquisition of Jhansi Orcha is aimed at further expanding into new geographies and to grow their presence into regional healthcare market. With the start of kidney transplant and liver transplant, company intends to focus on more advanced specialties, having high demand in respective markets, and deliver a higher ARPOB with the high ROE and ROCE of 36% and 24% respectively. We believe Yatharth is being offered at a reasonable valuation of 21 times EV by EBITDA as compared to its peers. With healthy financials along with growth potentials in Northern India, we recommend subscribe to the issue. Thank you.
Good morning. Yesterday, there was a con call hosted by SRF Limited. The SRF performance for the quarter was below expectations. However, the management is continued to see the growth momentum in its specialty chemical business through its strong capex and the ongoing projects. Also in fluorochemicals, though the current quarter, the quarter one was not good, the company is expecting overall volume growth in HFCs during FY24 compared to previous year. Also, it expects the capitalization of 1100 crore projects in FY24. In terms of PTFE capacity, it is expected to be commercialized soon, where the management is expecting 1,000 to 1,500 metric tons of sales. Also, in the packaging business, there was a weakness during the quarter, where the BOPET has seen the challenges and it will take time to recover. However, the BOPP has delivered the decent performance. The demand will grow in the near term. Aluminum foil project also to be commissioned in Q3 FY24, and the material revenue to be delivered in FY25. On the capex front, the solid woven fabric product has commissioned during Q1, and it will be for the growing demand of higher quality building fabrics. And also the board has approved the project of capacity expansion in anhydrous hydrogen chloride, which has a potential in pharma intermediates. So during the quarter, interest cost has increased on account of rise in interest rate and also slight increase in the borrowings. Inventory pileup was mainly observed at distributor level. So, so the management sees no issue at the innovator side. And it has launched 2 new products in agro and pharma during the quarter. So the stock is trading at a PE of 26.5 times to FY24 EPS, and our outlook remains positive over the long term based on the company's capacity expansion and the management outlook. Jubilant Foodworks Limited posted results, and results were in line with expectations. The revenue grew by 5.6% YOY at rupees 1,310 crore. The EBITDA margin came at 21.1% versus the expectation of 20.6%. There was a recent increase in the vegetable cost, which and the cheese cost, which may have the impact on the margins. Also, the company is guiding for the opening of 200 to 225 stores in FY24. Also, the Domino's Pizza India operations SSG remained at negative at 1.3% compared to 28.3% in last year, same quarter. So the one can expect positive same store sales growth and earnings growth on YOY basis from Q3 onwards. The stock is trading at a PE of 63.2 times to FY24 EPS, and outlook is neutral. Thank you.
Good morning. Tata Motors revenue. Tata Motors result came out, and the result is above expectation, as the volume came at 2.26 lakh units versus Q on Q of 2.52 lakhs and 2.31 lakh units on Y basis. Revenue on a consolidated basis came at 1,02,236 crores versus expectation of 1,01,290 crores, which actually degrew by 3.5% Q on Q basis, but improved by 42% on YOY. EBITDA margin came at 13.3% versus expectation of 11.8%, as against of Q on Q of 12.1% and 4.4% on YOY basis. JLR EBITDA margin is at 16.3%, that is up by 960 basis points YOY. And the company also booked highest EBITDA in 8 years, where the company has its order book remaining strong with 185,000 units, where more than 76% of which are Range Rover and Range Rover Sports and Defender. The chip and other supply constraints continue to ease out, and it expects gradual improvement to continue over FY24 also. Q2 production and cash flows is expected to be lower than Q1, reflecting the annual summer plant shutdown, while wholesale and profitability are expected to be more in line with the recent quarters. Management also indicated that CV demand is expected to improve sequentially in FY24 through innovation, service quality, and thematic brand activation, which will deliver double-digit EBITDA margin in FY24 by improving realization and cost savings. On the PV side, management expects the demand to remain steady with the onset of festive season, while the electrification trend is set to strengthen further. Other than this, the board of Tata Motors has also approved a scheme of arrangement for capital reduction of the A ordinary shares, which is also called DVR, differential voting rights shares, and against it, it will issue ordinary share as a consideration for the deduction. The company will issue 7 ordinary shares for every 10 DVRs held by the investors. The capital reduction consideration translates to a 23% premium to the A ordinary share price. This will result in 4.2% reduction in the number of outstanding equity shares, making it EPS accretive for all the shareholders. It expects that it will take 12 to 15 months for completion, and the transaction is taxable in the hands of A ordinary shareholders, as withholding tax is applicable for deemed dividends and capital gains. At present, the stock is trading at PE of 17.6 times of FY24 EPS. CAT result is also above expectation, as revenue came at 2,935 crores against expectation of 2,940 crores, which grew by 2.1% Q on Q basis and 4.1% YOY. The EBITDA margin came at 13.2% versus expectation of 11.9% from 12.8% Q on Q and 5.9% YOY basis. The YOY margin improvement is driven by operational efficiencies and raw material cost reduction, as the raw material basket cost reduced by 1.5% over Q4 FY23, resulting in gross margin expansion by 97 basis points. The employee cost normalized versus Q4 FY23 when higher retirals and incentives were being given. Other expenses increased sequentially due to higher expense and other costs. Going forward, in future, the management expects the better utilization of assets and improved efficiencies through digital intervention shall improve the margins. The stock is trading at PE of 20.1 times of FY24 EPS. Thank you.
Commodities team can take over.
Yeah, thank you, Jan. Very good morning, all. For today's trading sessions in USD we are expecting very small range bound movement. So on the lower side, we are expecting on the 81.80 range. On the higher side, we are expecting an 81.97 range. So if we get any profit booking around 81.80 levels, so one can initiate long positions in the range of 81.80 to 81.83 levels with a stop loss of 81.70 for the target of 81.96 levels. In JPY INR, one can initiate a long positions in the range of 58.06 to 57.99 levels with a stop loss of 57.80 57.79 levels for the target of 58.30 and 58.43 levels. In GBP INR, if we get any profit booking around 105.36 to 105.27 levels, then one can initiate a long positions. The stop loss of 104.94 for the target of 105.75 and 105.84 levels. Thank you.